With gold touching 50,000 rupees per gram, should one invest in the sovereign gold bond scheme? Hi, this is Mrin Agarwal. I'm a financial educator helping people achieve financial freedom. So, what is the sovereign gold bond scheme? First and foremost, this is a scheme where you can take exposure to gold, and the way it works is as follows: that it is issued by the Reserve Bank of India. You buy it at the prevailing price of gold. The scheme matures after 8 years, and after 8 years, you get the price of gold at that point in time. The biggest part in this scheme is the fact that the returns are completely tax free at maturity. There is a 2.5% interest that is paid every year, and that is certainly taxable. The sovereign gold bonds can actually be bought online, and in fact, there is a discount of 50 rupees if you buy the scheme online. The minimum investment is 1 gram, and the maximum is 4 kgs. The price for this particular tranche that is closing on July 14th has been maintained at rupees 4852 per gram. So, should you invest in SGB or not? Let us look at the past performance of SGB. As you can see, the earlier tranches are doing really well. That's basically led by the 56% increase in gold price over the last 18 months. We looked at the 8-year rolling returns on gold over a 15-year period. So the observation period was from 2005 to 2020, and we looked every day at the 8-year returns that gold gave. The average 8-year rolling return on gold in this 15-year period was 11.2%, but the point to note was that the minimum return was also 3.5%. So, all this goes to say is that gold is not always going to give you a great return. The performance of gold comes in spurts. There are some good periods, there are some bad periods. I remember there was a period from 2013 to 2018 where gold actually gave zero return. And then suddenly it's given you this 56% return over the last 2 years. So, when you invest in the SGB, you're basically investing because you're diversifying your portfolio into gold as well. And you're investing into SGB because you want to take an allocation towards gold. As far as the performance is concerned, well, it's anybody's guess as to what the price of gold would be 8 years down the line. Of course, SGB still remains the preferred option for gold investing. Certainly, buying physical gold is not a good idea because of all the overhead making charges, the storage issue as well. So, with SGB, the units get credited to your demat account, and any day holding units electronically is a much better bet than holding it physically. My final take: invest in it for your asset allocation. I think you can expect a decent return, but one really doesn't know given the entire run up that's happened on gold in the last 2 years. A lot also depends upon the economy and how the world economy does as well, but I would still think it's not a bad bet. Cheers.